It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Thursday evening, June 23rd, 2016. Cruising our way through this fourth week of the month of June. Markets are setting up for another exciting session tomorrow as the final Brexit votes are being tallied as we speak. Crude oil, S&P, and Euro are all quite bullish, while gold is bearish going into Friday's trading session. Needless to say, with all the commotion around the Brexit vote, we're expecting plenty of tradable opportunities in tomorrow's session, starting in just a few hours as the opening bell rings in Asia. Got a great plan for you guys tonight. We'll take a look at the calendar, take a look at the charts. But before we jump into the video, though, tonight, I do want to remind you the only place to watch the full-length version of this newsletter is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link and come join me here on the blog at Sideways Markets for the full-length version. While you're here, don't forget you can grab a free pass in the upper left-hand corner to come join me in our trade room as a guest and see what all the commotion's all about. Right below the video, lower left-hand side, don't forget to join the mailing list. I'll send you an email every evening when the nightly newsletter is ready to be viewed. Right below the video tonight, you'll see a spot to download all the charts. All the charts you'll see using in tonight's video, you can download those by following that link right below the video. And of course, over on the right-hand side, I will encourage you to learn more about what it means to be a student here at School of Trade. The who, what, where, when, and why, everything that is being a member here at SOT. There's a trial membership button on the right-hand side. And remember, I'm always here to help you guys out every step of the way. Use the live support button on our blog or our website for any questions you may have along the way. Hope you guys are having a great week here so far. It's been a lot of lead up to this Brexit vote. As I'm recording this video right now, polls have now closed in the European time zone, and so we are definitely expecting to start seeing some fireworks here as we start getting some leading numbers. Headlines are a little bit contradictory right now, so I'll let the final tally be presented, and we'll go from there in just a few hours. Now, looking at the schedule for tomorrow, again, all eyes and ears will be on the Brexit results. Remember, whenever we have big news that comes out, we have to be aware there's a tipping point where the market gets too volatile, and we're going to be watching that tomorrow morning live in real time with all of our students here at School of Trade. 8 o'clock Eastern time, we open up our trade room. I'll encourage you to come out and join. What I'm going to talk about tonight, we'll talk about the schedule for tomorrow, but again, I think all eyes and ears are going to be focused on not only the results, but more importantly, like we talk about anytime there's major news, the news itself is not necessarily the most important factor. It's the reaction to that news, and that's where we're going to be focusing our energy in the overnight session and into the U.S. morning session tomorrow. A word of caution. A word of caution. I'm going to be giving you support and resistance levels, trend opportunities. We have to play it by ear because of just the enormity of the size of this event that's coming out here in just a few hours. So I want you to promise me if it's moving too quickly or if it happens moving too slowly, I don't expect it to be too slow, but if it does happen to be too slow, too fast, use your best judgment on this. It's not the time to be gambling away your account because in about 24 to 48 hours, this will all be behind us, be back to our normal price action. All right, so no selling into aggressive bull markets, no buying into aggressive bear markets. I'm looking at you out there right now. All right. Please, please, please don't gamble with your money as this news comes out overnight. And again, I'm going to be here with you guys tomorrow morning in our trade room at 8 o'clock Eastern time, and we'll do it all together. Now, there's no major news coming out of Asia. It wouldn't even matter anyways because nobody's going to really be watching that news anyways. Really, the big news here is going to be in the next few hours, right, when the final tally comes out from the Brexit referendum. We do have some by comparison, some relatively minor news tomorrow. The IFO survey at 4 a.m., right, from our good friends in Germany. And then, of course, tomorrow morning in the U.S. session, we have the durable goods at 8:30 a.m., followed by consumer sentiment at 10 a.m. Fridays are always the same. Early in, early out. Be careful adding to new positions or getting into positions after 11 a.m. on Friday. Friday's a day where late in the day, late in the week, late in the month, traders take bigger risks, right? They get a little bit more aggressive because they're either trading with house money or they're trying to make up for losses that came earlier on in the day, in the week, in the month. So remember, traders, human beings, tend to take bigger risks later in the day, later in the week, later in the month. That's why end of the day on Friday, be careful, be careful. And of course, that is compounded when it comes to the fact that we've got some major news. Tomorrow might be a wire-to-wire high-volume day. It may also be a situation where a lot of the movement happens early in the session because the news is based out of Europe, and we may find ourselves in a very quiet market come 11 a.m. tomorrow morning. Again, if you don't know how to gauge the speed of the market and the volume coming in, come out and join me tomorrow. We'll be doing it live in real time in our trade room. I look forward to seeing you there. You know the schedule for tomorrow. Moving forward here, we'll see what the opening bell rings in Asia. Start here tonight with the S&P 500. Even the S&P is bullish and trying to complete the rotation up to the high of a bull channel this evening. It's hard to justify buying the high at this point, but the most recent move higher has been extremely strong, which tells us that smart buyers will be looking for seller failures on the next pullback for the most reliable trading opportunity tomorrow. Again, as we go through these, I'll do my very best to anticipate, but we're going to have to wait and see what the reaction looks like in just a few hours here. First of all, bunch of technical clues on the chart right now. The big thing right now is bull channel. We are trying to rotate and finish the rotation up to the high of that bull channel. Channel rotation, always an important factor here right now. A bull channel tells me that as we come off the lows, the next objective will be up at those highs. The most important thing here is the strength of this, right, of this market tells us we're probably going to get that move up to the high, but we know where the most reliable trades are going to be, right? They're going to be back down at that low. Regarding the bull channel, we know the high is resistance, we know the low is support, and we know the most reliable trades here are going to come at the low of that bull channel or at previous support areas below the low, right? So of course, a little trap low and then buying back up. So if you're a bull right now, based on the channel we have at this time, most reliable trades are going to come at the low of that bull channel or just below the low, right? Looking for those prior areas of support as the price pulls back. The measured move is the next clue that we see right now. The measured move puts us from A up to B, C up to D. We've got a measured move and a triple up objective has already been reached. Whenever we see the market blow right through a measured move or a triple up or a market objective, we then begin to look for the triple measured move. The hard part right now for the triple measured move is we haven't seen a pullback yet. And the pullback will definitely be one of the most important pieces of this puzzle. That's obviously where the buyers will be expected to be getting back in on this. But most importantly here, we have a runaway target up at 21. Right, 21. That's a big double up target off the A to the B leg, right, as we push higher. And then, of course, depending on if and when this thing pulls back, for example, let's say we get a, just for example purposes, let's say we get that pullback, right, back to, again, just an example, 2106. That's where you'll want to put that triple measured move leg, and that becomes, right, your runaway target at this point. Again, who knows how this market will react here in a few hours, right, once this market opens up and keeps moving through Asia. So, of course, bull channel at the highs for a target, triple measured move, right? Difficult to tell where it's going to be right now. We know the measured move area, the triple up area, that will be an area of support for buyers to look for opportunities on the pullback. And, of course, depending on where that pullback comes back to, we can then use that A to B leg to define where the possible triple measured move is going to be. Now, very important on this chart right now is going to be that strength that we can see here. Just obvious strength, right? Next clue on the chart right now. Now, a strong bullish move that goes into the measured move and then continues. I want you to see how the size of that green candle is tremendous, but look at how it continues and then closes above the prior green candle. We're going to see a few examples of that tonight. specifically on gold and euro, I believe it was. We'll see those in a moment. But really the most important thing right now is that we see a strong move with continuation that tells us this is likely to continue. Now, again, like I said earlier, I have a hard time saying buy this market right now. Yeah, it probably has more room to go higher here because of the strength, but just being a buyer at the highs is never a very good idea. What we want to look for is situations like this, where we see the bears try to sell it, they fail, and buy. So right now, that big, strong move tells us, look for that seller failure and look for that failure to be a buying opportunity to put that, right, to get that next leg up. Again, can't buy high, right? Don't want to buy high. I can buy high, but it will not be a good business decision, not for my trade account. And even though we have news coming out, I don't want to gamble, right? I don't want to gamble this away right now. So what I want to do is, because we have that continuation of strength, use these areas of previous resistance as support, right? Pull back to a prior area of support, for example. Look for sellers to try to sell off the high. They may be successful, but the odds are not in their favor. Look for the place where their stops are going to be, and that's what we'll be looking for the next leg up. On a strong move like this, I don't just feel confident to just buy the next pullback. What I'm looking for is the next pullback to be tried to sold, right? To be attacked by the sellers. Again, the sellers are going to try to run this thing back down to that channel, trying to fade this move. I'm going to be looking to leverage the odds of the bulls having control to buy into the stops of those sellers and find that move back up. Remember, as the market pulls back on a strong move like that, the objective is just to get back to that high, right? That's where the objective is, and then from there, we'll see if this market wants to continue, right, for another leg higher. Last but not least, we talked about the bull channel. Last piece of this puzzle is going to be that trading range. A little choppy range here as well. This will definitely be a price magnet if this thing comes back. Right now, it really is a very, very big if right now, looking very, very strong at this point. If you want to buy, resist the temptation to buy the high, wait for a pullback, and buy into seller failure. As we're opening up now here in Asia, you can see here now we have accomplished, right, the high of that channel. And again, now with that extreme follow through, we're looking for that pullback so we can buy low. I don't trust the first attempt from the buyers here. It's one of those situations where it's too simple, right? It's too easy. So as this thing pulls back, and again, it will pull back eventually. When it does, I'm looking for seller failure, right, to buy into it. Also, keep an eye out for traps below prior swings, right, and look for that as the opportunity here to be a buyer. Again, most reliable way to do this right now is we know there's strength here to the bull side. We may not get this to pull all the way back to the low of that channel. So the best way to be reliable with it is to wait for the price to pull back. It's bound to pull back a little bit eventually. If it doesn't, well, you either got to buy the high or wait it out, right? That's the hard part about being in a runaway market that's leading into news like this. With that said, we now know that as the pullback occurs, we got areas of support waiting for us. Look for sellers to try to sell into that move, right? And we know when they fail, that's going to give us the juice that we need to go back up and revisit that high. Most reliable trades will come at the low of the channel. Use that trading range. Use the low traps here. And again, if you do want to be a seller, wait for a new lower low and wait for the bears to actually hold a pullback. Then you've got the odds on your side and you can sell back down to those lows. Be careful, though, trying to sell into a runaway market. And don't forget about that major double up. And as soon as we get that pullback here, that will give you the green light to go out and look for that triple measured move based on the A to the B leg, right, going higher in tomorrow's session. It's shaping up to be a wild one here in the overnight session. Put on a cup of tea because it's going to be a late one here if you're on the East Coast or in Europe right now. Moving forward here on the crude. Crude is bullish and trading at the highs of a channel this evening. The strength of the move higher this afternoon tells us to expect the buyers to be looking for the next pullback, but the resistance at the channel high tells the bulls to wait for a pullback to prior support levels and then look for seller failure for the most reliable trading opportunities tomorrow. This is very much a rinse and repeat of what we just talked about on the S&P, right? S&P and crude oil have been very, very similar pretty much ever since the beginning of the year. First of all, we have a bull channel. That bull channel makes it very, very easy to tell where the most reliable trades are. Again, like I said on the S&P, though, this is being fueled by some news right now in the marketplace, which is causing traders to take a little bit